Hello and welcome to Martyn Lucas Investor. My name is Sensei, and right now we are counting down the minutes until we get CPI data coming out, and that's going to be a big, important number coming out very, very soon. But before we get on to that, we are looking at the price of Bitcoin pulling back slightly on the week. Quite a bearish daily candle we got closing yesterday. We had it. We had a sort of shooting star candle yesterday with a long wick, and now the follow through is occurring. So this is a bit of a warning sign, unfortunately, just showing us that Bitcoin can retrace from these levels quite fast. I would say if it holds 108,000, 106,000. It could be quite a bullish back test. However, just looking at this candle right now, it is showing me a possible reversal starting for Bitcoin. In fact, we can already see that a significant amount has reversed from that high to where we are right now is a 4.6% decrease in price. We also saw $3 get rejected from XRP, um, um, but it is actually holding up stronger than Bitcoin from the highest price at $3 to where we are right now. It's only a 4.5% drop. So XRP is holding up strong. But again, nothing wrong with coming back down to $2.62 before we try and blast past $3. We did have we did mention yesterday how many green candles we had in a row. One, two, three, four, five, six, seven. So 7 candles today could certainly be a red candle. I don't know the last time 7 candles in a row was green for XRP. I really can't see one, two, three, four, five, six. No, not even then. I can't see the last time we had 7 green candles, probably back in 2017. Um, and even then, I think this is the first time in history. There's probably one or two other times, but one, two, three, four, five, 6 candles. Nope. What about over here? Yes, we might have found it. This is back in 2017. One, two, three, four, five, six, seven, 8. And that eighth candle was a monster candle. So maybe things turn around today and we get a monster candle on XRP. But we are due a correction on XRP. We are due a red candle on XRP. So this is sort of as expected as well. So let me go back to today's date, where we are seeing a red candle forming for now. This can certainly turn green by the end of the day, but there's not been many times in history where you've seen XRP go up so fast.
Dave Matthews donated £2 through a super chat. NYSE ARCO approves ProShares Ultra XRP ETF.
Thank you, Dave Matthews. Yes, thank you for that news, but it's not the most significant news. We've seen many of these ETFs now being approved. They're futures ETFs, they're leveraged ETFs. We don't have a spot ETF, but Dave, thank you for bringing that to us. It's obviously bullish. It's obviously good to see, um, but it's nothing massive. It's not something that's going to have a big effect on XRP's price today. If it was a spot ETF, then yes. Shannon says we had an amazing run. Yes, we did. Of course, this run straight from $2 all the way to $3 is pretty big. There's just nothing wrong with having a retest. The only bearish thing would be if CPI comes out later. We're going to be covering it live shortly. If that comes out and it's and we start really seeing the effects of tariffs, and the economists and analysts start really bringing that to the media and saying this is all because of tariffs, this is finally coming through, all this sort of stuff. You'll see the global market sell off, and you could sort of go into another one of those bear markets. Maybe not a full on bear market, but something we saw a couple months ago when the tariffs got unveiled. Because the tariffs, there's new tariffs that keep coming out. The market's not really reacting. But if you start seeing inflation go up and they start seeing the effects, then it can turn red very quickly. What I'm going to do over here is, let me just do this. Gonna make a more efficient way of doing this, but for now, this is perfect. Dave gave a £2 super chat, so thank you. We always want to recognize the people that support the channel. Without you guys, we wouldn't be able to be live. So the top session super chat is Dave. Thank you very much for bringing that news. So already we are nearly at 91,000 subscribers. 90,601 subscribers. If you haven't subscribed yet, please do subscribe right. No sound. Sorry, 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 sorry. How long have I done this? This is interesting. I've done it again. Oh, we went half a week without me doing it, and I've done it again. I've done it again. Jim Ricketts, see how long it takes for it to realise. It's because I'm looking at the comments, and when I look at the comments, I can't see the most recent comments. Um, I don't even know where I was. Thank you for letting me know. We can ramble. Uh, all good. We're back. No, we're back. Refresh, refresh. We're back. Thank God I learnt lip reading with the CIA. Says Ibrahim. We're back. No, let me. We're all good. We're all good. We're all good. You're good now. Thank you. Um, we're all good. I hope. I hope I didn't have any issues earlier as well. Good morning, Sensei Martin. Hope everyone's well. Smash that like button on your way in. I'm just going to read some of these comments again. So, no $10 XRP. It's looking less likely now with this correction. Normally, you'd want to see a bit more momentum, but it's still possible. Something you still have to keep an eye on. Case drop. House passes bill. BlackRock ETF announced. Bank of America revealed. In is all right here. Yeah, if that all happens, moderating, that's $10 straight away, in my opinion. Again, nothing is financial advice. I was reacting to JPAC's comment. Thank you to you and your wife for such an amazing newsletter. Best money I spent. I really do appreciate that. And the newsletter is only going to get better. And there's going to be more ways to help you guys. And there's going to be as the money I make from it is going straight back into it. So thank you for doing that. Thank you for saying that. As it gets better, there might be a price increase, not for the original members, not the ones that already signed up, but maybe for the future. So if you haven't got the newsletter yet, the link is pinned up above. Thank you, JPact. I really appreciate that. And my wife's going to really appreciate that comment because she always asks, has anyone said anything about the newsletter? Has anyone complimented the pictures? All this sort of stuff. So I'll let her know. I'll pass on the comments. Um, Every day, me and her sit down 4 hours to get this done. We have an amazing run, slight pullback. Okay. I apologize for the sound situation. We're all good. We're all good. We're all good. Yes, we can hear you. Brilliant, brilliant, brilliant. There is a poll running right now. Green or red day. Is this can Today's going to be a very volatile day, and it's going to get volatile in the next 45 minutes. And when I say volatile, I mean majorly volatile. This is a really big CPI day. You get a bad read on CPI, and you can go down 5%. You get a good read, and you can go up 5%. And I'm talking the S&P 500 right now. Um, so volume is volume is low. Don't think the volume's low. Volume is low. I don't see that. Let me try that. That could be a bit better for you guys. Sorry about that. Sorry. Even though the Nasdaq is at all-time high. You should be all good. Everyone watching now should be fine. Please do hit the like button, subscribe if you haven't done so already. And let's get into the news now. If you haven't subscribed, we are on the final road to 100,000 subscribers, and there's going to be a very special prize for the people that are subscribed before 100,000. 90,404 subscribers. So 90,604 subscribers. Let's get into the news for today. Again, this is all from our very own newsletter. So the one big thing, 31,400. That's the new average price of a car in America, up $370 in a month. With 25% tariffs hitting auto imports, consumers are stampeding into used markets, driving inflation at ground level and signaling that tariff effect is no longer theoretical. It's happening now. We're going to see if CPI backs up that claim. Money move of the day: when inflation rises, revisit your recurring expenses, even trimming one or two automatic charges like overpriced insurance, app fees. Martyn might share a cool story with you guys later as well. Can free up cash to offset rising living costs. Small audits equals big resilience. You've got your market snapshot. The 5 things you need to know. Trump threatens 100% tariffs over Ukraine war. President Trump issued a bold ultimatum to Russia's trading partners, vowing to impose 100% secondary tariffs on any country continuing to trade with Moscow unless a Ukraine ceasefire is secured within 50 days, setting a de facto deadline of September the 2nd. Let's see if he holds that deadline as well. Let's see if it's going to be another taco trade. The threat zeroes in on China and India, which collectively account for 85% of Russian oil exports. I mean, if that comes into place, it's absolutely ridiculous. It's absolutely not that it's a bad thing to do. I'm just saying it would be terrible for the markets. I mean, you're basically putting you're putting 100% tariff on China. You're putting 100% tariff on India. You're putting 100% tariff on anyone else trading with Russia, and there is still people out there trading with Russia. And September the 2nd could be a bloody day, and I don't know. I don't think if anyone was taking this seriously, the markets would be down a lot more. Alongside this threat, Trump unveiled a $10 billion NATO arms package for Ukraine, marking a pivot from his earlier hesitations about military support. Standing beside NATO Secretary General Mark Rutte and at the White House, Trump voiced frustration with President Putin's perceived duplicity during phone negotiations. That's enough of that story. Nvidia rebound sparks global stock rally. $4 trillion valuation Nvidia now. It's absolutely crazy. I mean, it's amazing to see. It's something that we've been saying for a while. And you've got the Nasdaq creating all-time highs last night as well. So global equities advanced after the US reversed an export ban on Nvidia's H20 AI chips to China, a move that could restore up to 15 to 16 billion in lost revenue. Originally designed to comply with earlier trade curbs, the H20 has been caught in broader April 2025 crackdown. Now, with direct assurances from Washington, Nvidia expects to resume shipments imminently. CEO Jensen Huang, speaking from Beijing, confirmed the approval and announced an RTX Pro chip tailored for China. Nvidia shares jumped as much as 4% in pre-market trading, boosting Chinese tech names like Alibaba Hang Seng Tech Index as well. Are up. The development helped Nvidia become the world's first $4 trillion company, surpassing the milestone on surging AI demand, and a rebound in China-linked revenues. The policy shift also signaled a thaw in US-China tech tensions, benefiting major Chinese AI players like ByteDance and Tencent. Broader markets followed suit. European stocks rose 0.2%, Nasdaq futures gained 0.5%, S&P 500 futures added 0.3%. Asian indices, especially tech-heavy Hong Kong, climbed as much as 2%. Bitcoin and US Treasuries edged up on the softer dollar, with CPI data due and expectations of 0.3% monthly rise in both headline and core. Investors are eyeing the Fed's next move closely, and that's what we're going to be covering in about half an hour's time. Is going to be CPI, when everything can get very volatile. And I mean volatile. I mean, this is going to be a very, very interesting one. Are tariffs going to be priced into inflation this time round? We are expecting in the next couple months, probably in the next, from now to maybe 3 months' time, we'll potentially expecting it last time round as well, to really see how much tariffs are going to affect inflation, and we will know by today or next month or the month after. So we really need to keep an eye on this, and it can move the markets 5% on the major indexes. So imagine what that means for your XRP or your crypto holdings. The other concerning thing is there's so much going on with tariffs right now, and nothing is being priced in. And why is it not being priced in? Because no one thinks it's. Everyone thinks Donald Trump's going to pull back. If he doesn't pull back on a few of these things, then um, then the markets can certainly go into a bear market. I mean, if inflation comes in weak, you've got all of these tariffs. This new 100% secondary tariff on anyone trading with Russia, and you're looking at quite a few places: India, China, trading with Russia. I mean, most of their 85% of their oil exports come from Russia. They can't change that overnight. If those actually come into place, and you've got an EU with a 30% tariff, then it's just so weird to see the markets at all-time highs. We've seen FTSE 100 break the 9,000 barrier for the first time in historic milestone. Markets are hitting all-time highs, while we've got worse than expected tariffs coming in place. So we'll have to see if these actually come into fruition. If they do, then it can be a sudden drop, and that's why I always say be prepared for the upside and the downside, because the downside can come hard and fast at a certain point. And also, we were covering a story yesterday on the carry trade from Japan as well. You've got quite a few risks at all-time highs. That doesn't mean not be an investor. That just means always know that you can have quite a heavy dip. And remember, nothing I say is financial advice. It's my thoughts and opinions only. So the FTSE all-time highs, the fresh trade agreement with the US, which slashed car exports, facing 27.5% to 10%, offered a distinct edge over European counterparts, facing a 30% threat. In contrast, EU market vows the FTSE 100 performance signals a growing divergence, positioning UK equities as relatively more attractive. Nonetheless, headwind looms. The UK economy keeps contracting, another 0.1% in May, and global investors remain cautious about broader implications of trade fragmentation. The index's global revenue exposure and heavy commodity tilt continue to act as buffers against domestic economic shifts. The main reason for this rally in FTSE is the mining stocks. They're leading the rally. Rio Tinto, Glencore, Anglo American, they're all up about 4%. You've also got a big week for crypto. Congress moves to define crypto. House votes on Clarity Act. If you are watching, please do hit the like button. If you haven't hit the like button yet, what are you doing? I know it's early. It takes a second. It's free. It supports the channel. Just hit the like button. Subscribe if you haven't done so already. What are we on now? We are on 90,608. Thank you for everyone subscribing to the channel. If you haven't followed me on X, take a second out your day to follow me on X. It takes 1 second. Here is the link. It's free. There it is. Take a second. Let's see if we can get 1,200 followers today. I know we can do it, and I won't stop until we do. 1,177 followers. That means 23 people. That means you watching the stream right now. You haven't subscribed to my X. You haven't followed me on X. There must be 23 people. And if you're one of them, just take a second. Let's see if we can get this to 1,200. While you're there, let me pin the most recent post. If you've already followed me on X, come over here and please do hit the like button and refresh. Oh, sorry. I'll refresh it, but you hit the like button and repost it. This is all about the inflation warning. We want everyone to be in the stream when this happens. The inflation warning and the CPI numbers are coming out in 20 minutes. So I'm going to put a minute on the clock. We're going to come back to the crypto week story, the CPI data. We're going to watch the CPI data in a second. So you've got 2 minutes. Let's see if we can get to 1,200. And let's see if we can get to 20 retweets. Here is the link for the post as well. If you haven't hit the like button, do it right now. 2 minutes, and then we get straight back into it. If we haven't reached 1,200, maybe we won't cover the CPI report. We will see. Let me put the music on, and everyone takes a second, go follow me on X and repost the pinned post.
The year is 1991. Birds and people are living together in seemingly perfect harmony, until one day a young man catches fire. This is Phoenix.
$181. There's still 19 more. We can get it. If you haven't followed me on X, I'm talking to the people that haven't followed me on X. I'm sure there's people watching right now who haven't followed me on X. It takes literally 5 seconds. Here is the link for my X. Go and follow it. And then everyone who's already followed me, come over here and retweet my pinned post. All about inflation. We've got 1 minute. Can we do it?
Verse 2, Electric Boogaloo.
You see the truth behind the veil, and you know that.
Go, go, go. 17 now. We can do it. If you haven't followed me, I'm talking to you. Only 3 people have reposted. I'm going to give you the link to the pinned post. Please go and repost. Brent Mitchell always comes in, hits the like button straight away. PC Gaming, don't worry, we're covering the CPI report. We are keeping an eye on it. We are nearly there. 10 more people, 12 more people. You can do it. If you haven't done it yet, it takes a second. I'll give you the link once more. There's people being lazy. I know there's more people that haven't followed me on X. There's 444 people watching. 12 more people. Can we do it before the music ends? Thank you, everyone who participated in that. If you haven't yet, you've got the link, you've got the pinned post. You can go and repost it and give it a like and a read. Let's see how many we ended up with. 1,190. 10 more people. We might be able to do it by the end of the stream. Let's move on to our next main story. CPI is coming up in about 20 minutes time. We'll be covering it live on the channel. So a lot of news. One more thing before we get on to what I'm thinking about CPI. Bitcoin says maybe most already follow. Yeah, I don't. But I don't. I think there's definitely 10 more people in the watching who haven't followed. What is a CPI report? It is an inflation report to tell us the core price index. Core price index? Has that just left my mind? CPI stands for. I'm 99% sure it's core price index. Sorry, consumer price index. I apologize. It just left my head. Anyway, what it is, it's basically what the Fed used to look at inflation. So how bad is inflation? How much is inflation moving? Are we up on inflation? Are we down? All the inflation figures that are used for policy decisions, etc., etc. But we'll be coming on to that, and they get released in about 20 minutes' time. So yeah, you're basically looking at the cost of everyday items, and you're seeing how much they're going up. It's a basket of goods. And you're tracking it to see if they're going up or down to give you a month-on-month and a year-on-year figure. So Congress moves to define crypto. House votes on Clarity Act. This week's going to be big for crypto. The US House of Representatives is set to vote this week on the Digital Asset Market Clarity Act 2025, a sweeping proposal to establish a comprehensive regulatory framework for digital assets. Let me just leave that there. Passed out of the House Financial Services Committee by a 32-19 bipartisan vote by the Agricultural Committee by 47-6. The bill delineates responsibilities between the SEC and the CFTC over digital asset ecosystem. It introduces statutory definitions for digital commodity, digital assets, and mature blockchain systems, and outlines new rules for custody, exchange registration, and broker-dealer obligations. So this is where we start seeing what is a security and what's a commodity. This is quite big for crypto. And remember, there's things within it as well that's not just about commodity and assets. It helps understand the rules of the road, which, in my opinion, benefit Ripple more than anyone else, but obviously benefit the whole crypto industry. And outlines new rules for custody, exchange, registration. Yep, alongside the House is expected to take up the Genius Act, regulating payment stablecoins as part of a broader legislative package dubbed Crypto Week. The Clarity Act divides digital assets into securities under SEC oversight, digital commodities under CFTC oversight, and permitted payment stablecoins jointly regulated. A key innovation is the mature blockchain system test, allowing decentralized networks to fall under commodities jurisdiction. The bill also includes exemptions for specific investment contracts and addresses secondary market classification, tackling regulatory ambiguity that has stifled US crypto development. Analysts note the Act could reduce regulatory risk, enabling new offerings and greater institutional activity. Final outcomes hinge on Senate negotiations and implementation specifics, particularly how projects transition from security to commodity status. If passed, Clarity could be the regulatory North Star US crypto markets have long awaited, aligning innovation with structure and unlocking long dormant momentum. So, in short, 3 bills coming this week. Now we know that they're going to be voting on the Clarity Act. They're probably going to be voting on the Genius Act. The Clarity Act is probably the most important one, in my opinion, because it tells the SEC what they can do. It tells the CFTC what they can do. It tells them that they both regulate the stable coins. It tells us the rule of law. It tells us what's a commodity, what's a security. It tells us what regulations the exchanges are going to get. So everyone understands the regulations and they can build around it, and then we can have a competitive market. Right now, it's sort of a free-for-all where the SEC was just regulating by enforcement, and obviously that's what caused the whole Ripple SEC battle, which, by the way, I think next week we're going to get a ruling on. I'm getting more and more confident that next week is when we get the SEC to drop that appeal. That's what I'm thinking. Another sort of negative news is Taiwan turned city blocks into battlefields in a record 10-day Hang Kong drills. So they're getting ready for an invasion of, well, they're getting ready to get invaded. So Taiwan has launched its largest ever Han Kung 2041 military exercise involving 22,000 troops over 10 consecutive days of live fire and urban warfare drills. The scenario push deep into dense cityscapes. Troops redeploy through Tapio's metro systems. Shoppers are directed into basement shelters, enclosed supermarkets, and engineers fortify bridges and ports to delay a simulated PLA advance. So they basically turned it into a battlefield, just being prepared for the worst case scenario. If you want to read more about that, you can. And then today, in 15 minutes time, I think we're going to be going over to Martyn, who's going to be covering it live on this channel, and I'm going to give you all the things you need to know beforehand. So the markets are on edge before today's critical CPI reports, and it is a critical one because things can move very fast today, and it is when we potentially when we start seeing tariffs being priced in, either this month, next month, the month after. But if it starts getting priced in today, then get ready for the media to go crazy and saying tariffs that are causing a lot of inflation. And you've got all the other tariff news coming out, more tariffs coming out, for example, and then you can get a big correction. So always be prepared for worst case scenario, and that could be a pretty bad scenario. So what markets are watching as tariff effects finally enter the data? If you are enjoying today's show, please do hit the like button, subscribe if you haven't done so already. How many likes are we on, by the way? Here we go here. Let me refresh YouTube. 195, pretty good. We can get it to 250 though. 195. We should have 250. We've got about 500 people watching. If you haven't liked the show yet, there it is. Did we get any closer? I'm about to read this part, but just 1 second. Did we get any closer to 1,200 followers? 1,196 followers. 4 more. We can do it. We can do it. 4 people. 4 people. You know who you are. You haven't followed me on X yet. There it is. 4 more people. We've got 10 reposts. So even if you can help us get more followers by reposting, because maybe some of your followers will enjoy the inflation warning. And this is pretty time sensitive. So it'll be great if you can come in and like and repost some of the posts within, not just the first one, but you need to come in and do all of them. Some of these don't even have any likes on them. So go into the post and like the whole thread if you haven't done so already. If you repost it, maybe that will help us get 3 more followers. We can do it. We can do it. 3 more. 3 more. That's very exciting. 1,200. We can do it. Let me keep refreshing. 3 more people. I'll come back to that in a second. 90,624 subscribers. Okay, well, let's get ready for CPI. What markets are watching as tariff effects finally enter the data? The inflation data Americans receive at 8:30 a.m. Eastern Time, which is 1:30 p.m. UK time, and we're going to be covering it live any second now, could signal the beginning of tariff-driven price surge that economists have been warning about since Trump's return to office. While recent months have delivered surprisingly subdued inflation readings, today's June Consumer Price Index report is expected to show the first meaningful acceleration in consumer prices as the administration's aggressive trade policies begin working their way through the economy. And that's what I'm talking about today. Could be the day. Markets are bracing for headline inflation to jump 2.6% year over year from May's 2.4%. So we are expecting an increase. That's sort of priced in. However, with the monthly increase expected to triple from 0.1% to 0.3%, core CPI, which strips out volatile food and energy prices, is forecasted to climb 3% annually and 0.3% monthly. So if that happens, markets are probably just going to move sideways and it'll be nothing. So remember that 3% annually, 0.3%. That's going to be on the big screen when Martyn comes live. 3% annually. If that happens, and 0.3% monthly, you're in check. Nothing to really worry about. There might be little bits within the data report, but that's about what you're expecting, which is obviously not brilliant because we're increasing. The inflation's going up. Obviously, inflation always goes up, but inflation is increasing more than the 2% we'd like to see. But that is expected, so the market's pricing that in. A sharp acceleration from the 0.1% monthly gain from recorded in May. This anticipation pickup comes as tariff-related price pressures are finally expected to show up in official data. The Trump administration's 25% tariffs on steel and aluminum imports, along with various other levies, have been building pressure in the supply chain for months. Major retailers, including Walmart, have already warned that price increases are inevitable if consumers have not already seen them, with impacts becoming more pronounced throughout the summer. And this is a very important chart. Thanks to Bloomberg for this one. This is what you can see. This is JP Morgan analysts giving out some scenarios that can play out for the S&P 500. So if you get the month-on-month reading of 0.23% or lower, the probability is quite low, 5%. You can see a sort of a 1.5 to 2% gain on the S&P 500. That can result in Bitcoin going to all-time highs, 5% gains, XRP going to all-time highs as well, or breaking $3 perhaps. If you get a 0.23% or lower reading, we're expecting a 0.3%. Remember that. So it's not actually that unrealistic. They give it a 5% probability. Maybe it's a little bit more. If you get between 0.23 and 0.28, 30% probability, very close at 0.3, you can see maybe a 1% gain. Again, that'll be very good for the market. If you get 0.28 to 0.32, you still might see a gain of 0.25 to 0.75. If it's 0.32 to 0.37, so above that 0.3 level, 25% probability you can lose 0.5 to 1.25% on the S&P 500. If it's any more than 0.37% on the month-on-month reading, the CPI June month-on-month reading, the probability is quite low, but you can have 2% losses. And again, for Bitcoin, that could really more volatile, more risk on, that can really push it down. So that's quite a cool chart of what some analysts are predicting. So get ready for either a dip or a push up. Be prepared for all scenarios, as I always say, by giving you an idea of what the data looks like. By the way, today's stream is in 4K. Can you notice a difference? Have you moved your settings to 4K? Let me know if you have. Let me know if there's any buffering. Hopefully not. I have checked the speeds and everything, but let me know how today's stream is looking. The tariff, if you haven't followed me on X yet, we're trying to get to 1,100. No, 1,200. I think, yeah. There is my X link. Go and follow me there. The tariff transmission mechanism. The delayed appearance of tariff-driven inflation reflects the complex transmission mechanisms through which trade policy affects consumer prices. Companies initially absorb, so this is very important. This is all about tariffs and why it's taking a while for it to come through, because everyone said, well, tariffs are here, but they're not causing inflation. They don't cause inflation. Well, in my opinion, they do. And if you look at the facts, this is what's going on. Companies initially absorbed the higher costs by drawing down inventories that were stockpiled ahead of tariff implementation. So their stock didn't actually cost as much because they were buying before the tariffs came through, and they have it all stored up. Now they're selling it. They can sell it at the same prices, basically, because they bought it for those prices. However, As these pre-tariff stockpiles dwindle, businesses are finding it increasingly difficult to avoid passing costs to consumers. Once they start passing those costs on, that's when you start seeing it in inflation. So recent research suggests imported goods prices have risen roughly 3% between March and June, with competing domestic products rising about 2%, indicating broader pricing pressures across sectors. The Federal Reserve Bank of Louis, St. Louis estimates that if fully implemented, a 10% increase in the effective US tariff rate could boost PCA inflation by as much as 1.2 percentage points. The direct one time price effect is estimated at 0.5 percentage points, while indirect effects through supply chains distributions and competitive dynamics could add another 0.7 percentage points. Bond markets already pricing in inflation risk. So while equity markets have largely shrugged off tariff concerns, bond investors are positioning for higher inflation. Remember, the bond market's actually bigger than the stock market, and potentially more um, seasoned investors are in the bond market. So they're getting ready for this. The stock market maybe isn't. So Treasury yields have been rising throughout July, with the 10-year notes climbing to 4.43% as fixed income traders grow increasingly concerned about price pressures. This divergence between stock and bond market sentiment mirrors the pattern seen in Bloomberg's scenario table, which I just showed you. Equity options are pricing in only a 0.6% move in the S&P 500 following the CPI release, well below the 0.9 average realized more over the past year. The yield curve steepening reflects expectations that the Federal Reserve will maintain its restrictive policy stance longer than previous anticipated. Fed Chair Jerome Powell has emphasized that the central bank is prepared to make certain that a one time increase in the price level does not become an ongoing inflation problem. Key components to watch. And while we're talking about that, let me go to your comments for a second so I can bring up what we're expecting for the FOMC meeting and if they're going to cut or not. I've got the data, and this might change or probably will change after we get the CPI data in about 5-10 minutes time. Picture looks good. Oh, thank you. Oh wow, have this on 720p, much better now. Yes, you can go onto the setting cogs if you want to see it in 4K. You go onto the settings cogs, you go onto quality, and you can go all the way up to 4K to get the best quality. Looks much better. 4K looks great. Oh, I love it. Picture looks good. Market has been too positive lately. We are all due for losses, lads. Nice 4K sensor, thank you. Unfortunately, a spike in inflation will be irrational for the Fed chair empowerment to reduce the rate. Rationale for no, it wouldn't actually. What do you mean? Unfortunately, a spike in inflation will be the rationale for Fed Chair Powell to not, not. I thought you said not reduce the rate. Yes, that would be, and that's what I'm showing you right here, right now. What we've got going on, and this is what I said. So again, I'm right, Martyn's wrong. For the first time ever, I said that last month we definitely wouldn't have a rate cut, and this month we most likely, pretty certainly, won't have a rate cut either. And there's a 97% chance now that we won't have a rate cut. This could be the only thing that pushes the odds in a rate cut's favour. But right now we are looking at no rate cut, 97% chance, no rate cut in July. In July's reading, but in September, that's when I've said we will. So there we go. My final thoughts before we go over to Martyn. The key components of what shelter costs remain the single largest. Oh, we've just got his link. So let's wrap up the show in the next few minutes and go over to Martyn. And we will have the CPI results live. Shelter costs remain the single largest component for CPI, accounting for about 1/3 of overall index. Used cars prices remain volatile. Core goods categories are where economists expect the most immediate tariff impact. We've just talked about that. I think you've got all the information you need. If you want a table, there is a table from Bloomberg. So thanks for them to for providing this table. It's all in the newsletter. So if you want the newsletter, it takes 1 second to sign up. Here is the link. You get this every single day, depending on what's going on. Here is the newsletter link. We just had the end of the poll, green or red day. Let me click on this, make sure we've got. He's going live in 1.5 minutes time. So green or red day. 61% of you say green, 38% say red. So you know what we need. Remember, the figures are going to be live on the screen. So what would be good is anything under 0.3. What would be bad is basically anything over 0.32. If you're under 0.2, then it's going to be even better. And that's when you can have a green day. If it's over 0.4, that's when it's going to be a very bad day. And that's when I'm talking about CPI month-on-month readings. One final look at X. Did we do it? Did we do it? 1,202 followers. Thank you. We did it. We did it. There we go. Brilliant. Okay, let's go over to Martyn now. He's going to have the CPI report straight away. So here is his link. Martyn will go live straight away as I send you, because I'm sure he wants a little build up to it as well. And the numbers are coming out in literally 3 or 4 minutes. So everyone click on that link right now. CPI report. I've just told you about the numbers, my thoughts. Martyn's going to talk about it. He's going to cover it live, and it's happening in a couple minutes time. He'll be going live literally in 30 seconds. So here is the link. Click on it right now. Say Sensei sent me, so he knows that you came because of me. Go into the comments and put Sensei sent me. We're going there right now. Until next time, live every single morning. Morning forecast. Remember the time. We go back live about an hour before you're looking at your time zone right now, every single morning. Until next time, take care of yourselves and each other. Bye-bye.